Good evening, good evening, good evening. Um, dollar pies for my tardiness. I was sitting up here trying to put together some slides, but I realized, like, man, it's time to go live right now. I'm so used to going live at 6:30. Then I was like, I'm gonna go live at 6 tonight. Forgot I got to pick up Timothy from football conditioning at 5. So it's like, then I come home, start trying to make the slides because I do everything spur of the moment. And ran out of time from making the slides. So I said, you know what? Just gonna do it without no slides. Um, so I jollipies for my tardiness. Um, I'm something in my mouth. Um, I was making a banner. So welcome, 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 welcome. Thank you for tuning in. Thank you for tuning in. If this is your first time tuning in to Tim's Tidbits, y'all let me know if y'all can hear me. Can y'all hear me okay? If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. This right here is a very special pop-up. I haven't been doing live streams. I said I wasn't going to do any live streams until next week. I did do a few pop-up lives with the channel members. Then today, when I was at the gym, I said, you know what? I want to make a video. I want to make a video for people who are struggling with the ICT concepts, with people who um, don't really understand it, people that feel overwhelmed, and I cannot forget about the lazy bums. Even the lazy bums. This right here is ICT concepts clip. Oh, hold on, 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 hold on. Let me take that off. I spelled that wrong. Cliffs. There you go. ICT concepts Cliffs notes. Right? And the reason why I'm doing this right here is because when I first started learning ICT concepts, right, I felt overwhelmed. I felt like it was super complicated. I felt like I felt like it was just so much, like it was just so much. Michael was just piling it on my plate. I'm like, I'm full. I'm full. I can't take anymore, man. Please stop. And I felt so overwhelmed. But then one day it clicked. And I'm not even talking about the aha moment that PDub helped me get. One day I was just sitting there and I was watching the bridge builders video. And I don't know what made it click. I don't know what about that video made it click, but something just clicked in my head. And when it clicked, I was like, that took it out, man. I was like, can it really all be so simple? And don't get me wrong, the concepts are very complicated, the concepts are very detailed, but it's no different than anything you do every day. Just imagine, if you will, pretend like you're a baby, right? Not even a toddler yet, right? You're a baby. All you can do is just scoot around on your stomach. Scoot around on your stomach. Imagine the first time you try to stand up, you just collapse. But now you can stand on one foot, right? But when you were a baby, you didn't understand all the different muscles in your legs, in your core, in your back, you never realize all the muscles that it takes just to stand. Hurt your back. Hurt your back one day. And then just try to stand up. You be like, man, I didn't even know I use my back to stand up. You never realize how many different muscles you're actually using just to stand. But you do it without thinking. You're not overcomplicating it. When you first learn how to ride a bike, When you first learn how to drive a car, every child, I don't care who you are, I don't care if it's from the 1920s to the 2023s. If you put them behind a wheel for the first time, what's the first thing they do? Everybody at your house right now on the count of three, tell me what's the first thing kids do when they sit behind a car or if they pretend like they driving. If you tell a kid to pretend like they driving, what's the first thing they do? On the count of three. 1, 2, 3, go. That's driving to kids. Look, I'm driving. Look, I'm driving. Right? But when you think about all the things you got to do to actually drive a car, if you do all this right here, you wrecking. Just hitting everybody's car. You wrecking. Ain't got nothing to do with driving. Can't tell a kid that though. But that's what we do when it comes to these ICT concepts, right? We try to go through the whole driver's manual. Give me a drive. I ain't got a driver's manual. I ain't got nothing in here I could grab. All the books is in boxes. You just get go through the driver's manual that quick, then you jump in front of the charts. Just hitting everything. Hitting everything. Because you're complicating it. You're overcomplicating it. I did the same thing. But Tim, what are you talking about? Let's go over here to the screen. Like I said, I was trying to put together some slides. I got down to the 5th slide and realized it was after 6 o'clock. Right? I guess I can read what I started. And what I can do if I feel like being nice. Whatever I do, if I save some stuff, I may end up finishing the slides after the live, but just annotate stuff as I go along. We'll see how that works. If that work out, then that's what I'll do. If that don't work out, it won't be no slides for y'all to download. How about that? Okay. Right. Disclaimer. I need to put y'all somewhere where I can see y'all. Oh, let me see who in the chat, man. Who in the chat? Who done pulled up with me? Who pulled up with me? We got Rhonda. Rhonda said I will be here for it. And I just wanted to comment before you. What's up, Rhonda? If you in here, what's up? Here to learn shit. What's up, Lil Hope? What's up, Deborah? What's going on, Sanjay? What's up, Father Legends? What's up, Tranisha? What's up, Trader Mo? What's up, Linda? What's up, AJ? AJ ain't seen you in a month of Sundays. What's up, Linda? What's going on, Laverne? My sweetie up in here. What's up, KC? What's up, Hines? What? Oh, wait a minute. I ain't never seen that name before. I've never seen that name before. Mother Eats. I've never seen that name before. Mother Eats. If this is not your first time pulling up, I truly jollipies, but I've never seen the name before. So welcome. What's up, Kim? We got Ice J Baby Fish. Is that Ice J Baby Fish? J Fish? What that? What buddy name is it? Ice J Baby Fish? What his name is? Ice JJ Fish. Okay. Okay, Jai Fish. That ain't you. I thought that was Ice JJ Fish. Do y'all who know who Ice JJ Fish is? Y'all ever heard of Ice JJ Fish? If y'all know who Ice JJ Fish is, put it in the chat. He was the one dude they used to be making them songs. I'm so good about you, girl. What's going on, everybody? Hey man, let's get to it, man. I'm gonna go through the couple slides that I was able to make in like 10 minutes, and then we go get right into it, man. Why didn't it change? Oh, because I ain't on the right screen. All right. ICT Cliff Notes. Kiss. Who know what kiss mean? Who know what kiss mean? This is my first time ever seeing this. The Bag Talk Show. Bag Talk Show. Appreciate you for pulling up. If this is not your first time pulling up, I truly jalapies. If it is your first time, welcome. Uh, I'm not gonna try to say that. What's happening with you? I ain't never seen that name before, and I ain't never seen nobody pose like that right there on their pitch out there on the beach like this here, looking like they're in a cool water commercial. But I feel you, appreciate you for pulling up. How you doing? Welcome. If it's not your first time tuning in, I jalapies. Nope, sorry, aka fish lips. Okay. I'm gonna put a pin in that right there. I'm gonna put a pin in that, Jai Fish. Put a pin in that. Yes, that's it right there. Keep it simple, stupid. That's it. Keep it simple, stupid. Keep it simple, stupid. I learned that when I was in the military. Kiss. Keep it simple, stupid. Stop trying to overcomplicate. Clay. Hey man, when I said complicated, yeah, man, it's like it's a dude. I was watching one of his videos. I'm trying to think of the word he couldn't say. I'm gonna get it in a minute, right? Right. No matter what you do, no matter what you do, when it comes to Hines, what's good? Wait, what's your Discord name? Oh, okay. When it comes to all ICT concepts, right? Do not deviate, right? Remember, everything about ICT concepts is based on predefined rules and criteria, right? Everything is centralized around time and price. Let me say that again. Everything is centralized around time and price. Why is it centralized around time and price? Because it's based off of algorithmic trading and the probability of the setups to um be more accurate is during certain times, which Michael coined his kill zones, right? You got the London kill zone, you got the New York kill zones. You know what I'm saying? The London, it's like the pretty much the beginning of um the time when you're trading before the lunch break. So the kill zone for go look up ICT kill zones for the exact numbers. I don't trade the London that much, so I can't give you the exact numbers on it. But like for the New York kill zone, it varies depending on if you're doing equities or futures. But pretty much anytime after the 8:30 news up until like 11:30, that's a good time to be looking for these algorithmic conditions, right? And then in the afternoon, anytime after like 1:30 up until 3, and then 3 up until 4 if you trade that late in the afternoon. But those are the times you want to be looking for your setup, right? 3 to 4 on London. There you go. 2 to 5-ish. So play with the times, right? Play with the times, right? Find that pocket. And ain't nothing concrete. Is what I'm saying? Just look for it during this window. You want to set up the form during this window, right? And price. Everything revolves around the open, high, low, and close, right? It don't matter if you're looking at a minute candle, a daily candle, a weekly candle, a monthly candle, a 15-minute time frame, an hourly time frame. It don't matter what time frame or what you. It's all about the open, high, low, and close. It don't matter if you're looking at a session, the New York morning. It's about the open, high, low, and close. What's the open of the New York morning? What's the high of the New York morning? What's the low of the New York morning? What's the close of the New York morning? Open, high, low, and close. What's the high of this candle, the low of this candle, the open of this candle, the close? Open, high, low, and close. It don't matter what it is. What's up, baby? How you doing? You some of the luscious, girl. Yeah, come on. Where you at, baby? Hold on, y'all. All right, y'all. I'm back. I'm back. My sweetie just got back from. She was out of town. So it's all about the open, high, low, and close. Remember that. No indicators, no volume profile, no RSI, no nothing. Open, high, low, and close. Looking at the charts, right? Now, if you is some kind of savant that can write numbers down on paper and look at them numbers printing, you can just write down the open, high, low, and open, New York open, blah, 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 midnight open, blah, 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 London open, blah, 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 and just look at the paper. Me personally, I put lines on my charts. I put a line there, midnight open. You know what I'm saying? I'm a visual person. I'm a visual person. I'm looking at it. I'm putting lines there, right? But you want to sell in a premium and you want to buy in a discount, right? Selling a premium, buying a discount. You know what I'm saying? How do you know the premium and the discount is all about the dealing range that you're looking at? You have to be in sync with the algorithm, looking at the correct dealing range to know when you're in a premium and when you're in a discount, right? If you're a intraday trader, right, you can go through several premiums and discounts within one session. If you're, if you're a full day trader, right, you'll have a premium and a discount of the overall day. If you're a swing trader, you may have a premium and a discount of the overall week, of the overall month, of the, it just depends on what time frame you're trading, how many premiums and discounts you're going to see. The higher the time frame, the less setups you're going to get, the less premium and discounts you're going to see. The lower the time frame, the more setups you will see. You know what I'm saying? The lower the time frame, sometimes the moves are going to be smaller moves. You know what I'm saying? It may, on an intraday, 6 points, maybe all you get, you may get 30 points. On a swing or a full day trade, you may get anywhere from 20 to 50 points, or, it's just depend on the volatility of the market. But the higher the time frame, the less setups you're going to see. But it's all about selling in the premium, buying in the discount, right? Do not deviate. Again, time and price, you only want to be trading during the kill zones. If you trade in the New York session, which I do, anytime after that, I go after 8:30 because that's the news time, right? You can start as early as 7:30, 8 o'clock, but I try to go after 8:30 up until like 11:30 looking for my setup, right? Because that's after the news time. News time is typically at 8. Sometimes you got news at 10, 10:30, but it's typically most big news drivers going to be at 8:30, and sometimes the big news drivers be at like 2 and 2:30. That's with the FOMC and the Fed rate decisions and all of that. And open, high, low, close, selling the premium, buying a discount. All right. Right. Okay. Bias and draw. Right. I used to confuse this and mix this up all the time. Right. I used to mix this up all the time. Bias and draw. Right. Well, Tim, what's the difference? I don't know what the difference is to you. This is just how I see it. Bias, right, is if price is bullish or bearish. Notice what I said, right? Let me go on full screen and say this right here, right? Bias is whether price is bullish or bearish. Notice I didn't say if you are bullish or if you are bearish. Bias is if price is bullish or bearish. Capiche? Okay, right? Where does the bias come from, right? The bias can come from two different places, right? The overall bias, right? The more weightier bias, the bias that's going to give you the broader moves or the possibility of broader moves is the higher time frame bias. And you're going to get that from the weekly and the daily charts, right? You're going to get that from the weekly and the daily charts. And I'm going to get into how I did. But do y'all notice something? Y'all notice something? We've been talking for almost 20 minutes and I ain't said nothing about actually taking a trade yet. I ain't said nothing about I ain't said nothing about entering. I ain't said nothing about, you know what I'm saying? I ain't talking about pushing no button yet as far as this is what you need to do to get into the trade. I ain't said nothing about it because you know why? Here's the gag. Come here. The entry is the least important part of this entire thing. In any concepts, not just ICT, the entry is the least important part. If you don't have all this other stuff that we're talking about right now, if you don't have that right and you don't have an understanding of it, the entry does you no good. You might as well get a quarter, flip it, buy on heads, sell on tails. Because it's a 50-50 chance if you're going to be right or not. If you don't have all this stuff right there that we talked about right now. So you can get it from the weekly and the daily charts. And you can also have intraday biases, right? So you can have a overall bias that's bullish with an intraday bias that's bearish and vice versa. And then you can have an intraday bias that supports the overall bias. Now, when your intraday bias supports the overall bias, whoo, that's when you're cooking with Crisco, baby. That's when you pull out the big guns. That's when if your intraday bias supports the overall bias in your setup forms, if you normally put on 5 contracts, you might want to put on 8. If you normally trade 2 contracts, you might want to put on 3 or 4. Because when the intraday bias supports the higher time frame bias and your setup forms, doggy, you cook it with Crisco. The draw. What is the draw? Right? The draw is where is price going now? Where is price seeking liquidity? Where is the liquidity? The liquidity resides. Where does the money reside? That's what liquidity is. Where does the money reside? The money is going to reside in above highs and below lows. Those are what ICT call liquidity pools. Pools of liquidity rest above highs and below lows, right? You can also have a draw that's an imbalance or a void. because there's some liquidity left in there. It's not a liquidity pool, but it's a draw on liquidity, because there's some liquidity that didn't get offered in imbalances and voids. Somebody got skipped in an imbalance. Everybody got skipped in a void. So there's liquidity. It's a draw. It's drawing price to it. Liquidity pools drawing price to it. So that's the draw, right? So what's your bias and what's your draw? Very, very important. What's your bias and what's your draw? And remember, don't deviate. Time and price, right? Time and price, bias and draw. Time and price, bias and draw. Say it with me. Time and price, bias and draw. One more time. Time and price, bias and draw. And don't deviate, right? Just pound that in your head. I'm gonna go full screen. Y'all ready? Say it with me one more time. Y'all ready? On the count of 3. 1, 2, 3. Time and price, bias and draw. One more time. Time and price, bias and draw. You have just solved the Rubik's Cube. That's the key. That you just got a solid gold key stuck in your ear, turned it, and unlocked everything you need to know to be successful when putting together your model. Everything you need to know to be successful when putting together your model, right? Now, there's some other stuff you need to know, and it ain't everything, because you need to know the lingo, right? You need to know the ICT lingo. If you don't know the ICT lingo, I got a lingo playlist, ICT, I think starting at month 4 on the core content, I believe. Might be month 3 or 4 when he started talking about the PD arrays. Go and learn what the PD arrays are. I got some nice, clear, concise videos telling you what each PD array is in playlist. ICT Concepts Explained, the lingo playlist, 8 videos breaking down each one of the PD arrays, what they are, right? Now, you don't need to use all the PD arrays, right? Now, what I'm going to do, now that I've given you everything you need to know, time and price, bias and draw, right? Now that I've given you everything you need to know, now we're going to go to the chart, right? And I'm going to break down what I do every single day, 2 variations of my own personal model that I use, right? I initially started calling it the liquidity run reversal, right? And then I did away with that name, but it's the same entry model, right? With a slight deviation, right? It's a fair value gap, it's a run on liquidity, breaking market structure, retrace back to a fair value gap, right? But the new version incorporates a breaker, because when I did my study of my journals, I learned that when the breaker was present, my success rate was higher. So now my primary model needs to include the breaker, but since my original model, it didn't have to have the breaker, I still know how to trade it. If it's not a breaker, if it's a mitigation block, I know how to trade it still. You know what I'm saying? And it's a few things I'm going to sprinkle in there to let you know when it's when you know you're cooking with Crisco. Now, let's get into it. Let's talk about bias and draw, right? Now, looking at this chart right here, If you, I don't know if you noticed in the slides when I was doing it, because I didn't point it out, but the other day I sent out this picture right here, right? I sent out this picture right here last night. You see the date up here says May 16th, 2023 at 6:49 p.m. Right? I sent this out. I sent this out to the Black Spiders. I said, hey, here's what I'm watching for the overnight price Haction. These are the PD arrays that I'm watching. Right? These are the PD arrays that I'm watching. Right? If you notice, there's not a whole lot on this image right here. Right? If you look, it looks about the same. It looks about the same right there. Right? See that 4-hour fair value gap? Just on this picture here, you can't see that daily gap that's down there. Right? See that 4-hour. Whoop, see that 4-hour fair value gap there? That's the same 4-hour fair value gap. You know, this other stuff in the middle there. It's this other stuff in the middle. The only thing that's not here now is I deleted this 15-minute fair value gap there. I deleted that off. But everything else pretty. And then this buy side up there, right? That buy side there, I moved that. I moved that buy side right there. I took that buy side off. Right. I took that buy side off later in the day. And I sent out to the Black Spiders after the market closed. I said, hey, the ES went crazy. I only expected it to come here above the previous day's high, that buy side right there, but it went all the way up to my stretch goal in one freaking day. This right here is my weekly target. Now let's get into it. Right? I just want to show that picture right there so that, you know, people, if this your first time tuning in, you won't say, hey, this guy just put all this stuff on his chart after it happened. Here it is right here. I sent it out last night. Right? Now, why were these things on my chart? Right? Why did I send this to the Black Spiders like this right here? Right? You couldn't see the weekly liquidity void. You couldn't see this daily fair value gap. Why didn't I include all of that when I sent it out to them? Because this weekly liquidity void is too far outside of the picture for just intraday trading. And the ES don't typically run that many numbers. Let's see how many numbers that is. Let's get us a handy dandy info line. We're just going to start like from the open of the day, right? And run all the way up there. 150 handles, as ICT would say. ES usually don't do 150 points in a day. So it's too far outside, right? This daily fair value gap down here is too far to the downside to support the bullish bias, right? If we come down to this fair value gap, we're having a daily breaking market structure to the downside. That's too far to the downside. That voids the bullish bias. Notice I didn't say that voids my bias. I said that voids the bullish bias. If we were to come down to this daily fair value gap, that gives us a breaking market structure, that gives us a bearish breaking market structure, giving us a bearish bias, because now the market is saying, hey, I want to go down. I'm breaking down. Got a breaking market structure below this swing low down here, right? So that's why when I sent it out, I only sent, right, what was pertinent, or what word I'm looking for, what supports the theory of attacking above this previous day high and maybe attacking that buy side liquidity above this previous day's high, right? and then this weekly stretch goal up here. So daily target right here, weekly target up there, right? So the bias is bullish. Now let's explain why the bias is bullish, right? The easiest way that I've figured out how to determine my bias, right? No matter what time frame it is right. Let me blank all of this off. Let me take all of this off the chart right here, right? So whenever, right, we're just gonna come over here, since you know what I'm saying, right now we're it's like we're bullish, right? The bias is bullish, right? So let's go back. Let's go back for a minute, right? Right. Let's go all the way back over here, right? So I can show it to you on a broader scope, right? Because this right here is Wednesday, April 26th, right? This right here is Monday, May 1st. So let me move my crosshairs. This right here is Wednesday, April 26th, and I'm gonna let you know what's the importance of these days. If you happen to know the answer already, put it in the chat. What's important about the days that I'm pointing out right now? Wednesday, April 26th, Monday, May 1st, Thursday, May 4th, right? So since we got, let's look at the calendar, what that look like, right? So April 26th is 1 week. May 1st and May 4th are in the following week, right? So this spans over a couple weeks. So since it spans over a couple weeks, right, this bias is going to be related to a higher time frame, overall higher time frame, right? A higher time frame bias, right? This like arching. This is overall art. This is like even a swing trade type bias, right? Don't nobody know what's the significance of these, of this Monday, this Wednesday, this Monday, and this Thursday. Don't nobody know what the significance is, right? What are these? Somebody tell me, what are these? Right here. This right here. This right here. This right there. Somebody tell me, what are those? What are those? We're gonna make this interactive. You got to put some. It retested swings. Thank you. Highs and lows. Thank you. It retested bullish order block. We're not there yet. Is that all you use? Is always rise, always rise. You know how they say it ain't no such thing as. No, I ain't gonna say that. Yes, that's all I use. ICT. Yes, buy side and sell side, swing points. There you go. Swing lows and swing highs. There you go. Created swing lows and swing highs. Yes, yes. Thank you, thank you, thank you. You're far too kind. Okay, now, right? Put a line there. Yes, y'all can see that. Right? Put a line there. All right. We're gonna make this sell sizzle. Making that sell sizzle. Here. Buy side, right? So the easiest, forget about what time frame it is right now. Now, the time frame in this case is important because we're looking over a few weeks' time. So this bias, right? This bias is going to this bias is going to lend to an overall overall time frame, right? Now, the easiest way I learn to figure out bias is by where did the candle close after it took the liquidity, right? After it took liquidity, where did the candle close, right? That's the easiest way for me to determine the bias, right? Where did the candle close, right? So after it took liquidity, right? So looking right here on this candle here, right? This candle here on Wednesday. Well, we're gonna look at this candle here first, then we're gonna look at this candle here, right? So this candle here, right? After we came below this daily candle there, right? We closed below that low, right? So it's giving me a bullish bias because we came down, we took out a low, and we closed below that low. So we broke the low, right? We broke the low, and then we did not reject after taking out that liquidity. So if we take the liquidity and don't reject, right, the bias for me is a continuation. Whatever direction it was going, the bias is a continuation. If we take out the liquidity and reject, the bias can possibly be ready to reverse, right? So if we take out liquidity and don't reject, it's highly probable that the bias will be a continuation, right? And notice, I'm not saying it's bearish or bullish, because the bearish and the bullish come from whichever way we're trending at the time, whichever way we're moving at the time. So just so not to complicate it and say, oh, it's bearish, but if you take out liquidity and you don't reject, the bias is more likely to be a continuation. So if you're moving, if you break bearish, right, you break a low and you close below that low and don't reject off of it, right? You take out this low, right? Take out this low here and don't get like a nice rejection, right? Then the bias will probably continue bearish. If you're moving up and you break a high and you don't reject, it's highly probable that the bias will continue, right? So you just continue with that bias until the market gives you a breaking structure the other way, right? That's the same thing. Like that's the same thing as, now you're getting, once you know what I'm saying, once you get the breaking structure the other way, okay, you know what I'm saying? Now, and that's going to be the higher the time frame, the longer it's going to take to play out. The lower, when you start to see a hint of it on the higher time frames, it's been playing out on the lower time frames. The lower you go, the farther back it started playing out, right? So on these daily candles, right? On these days, this reversal here, like when we came up and came down, this right here, right, is playing out from when we took out this liquidity over there, right? And so this is over here is when you on the daily time frame, you see the rejection here, right? But you don't get this rejection until the end of the day, right? So this day over here, now you like, okay, we rejected off that high. That's like 2-3 days. But inside here, some rejecting happened when we went above this. Some rejecting happened on here intraday on the lower time frame. So on this day, you was given a clue that it was reversing on May the 1st. In intraday, you probably got a short there, but on the daily time frame, you didn't get your confirmation of it until sometime on the 2nd, after you got a break in market structure over here somewhere on the intraday. But if you only watching the daily candles, your confirmation may not have come until this day over here. Because now you know it's reversing, and now on this day over here, you're waiting for it to come back where? To a premium so that you can sell. Right? So on a daily time frame, right? On a daily time frame, you're looking, we took out, I'm gonna get back to these over here too, right? We took out that high right there. I'm gonna change this to black so that it's not the same as the other ones, right? We took out this high right here from April 18th, right? On the 1st of May, right? We broke down, we took out sell side liquidity and closed below it with great authority, right? Closed below it. So now it's bearish, but it didn't come back to a premium for us to sell until May the 3rd. So 1, 2, 3 days for this to play out. On a daily time frame, it took 1, 2, 3 days for this whole thing to play out, right? But let's do a little something real quick, and then I'm just showing you like the difference between intraday and bear with me because I ain't playing none of this out. I'm just going off the cuff with this right here. Y'all already see I ain't got no slides really put together, but I just want to show you the difference between intraday and not. So now for daily people that work and you can't watch the charts every day, it took you 1 day to take out the highs and reject, 2 to get your bias by breaking low and closing below that low, and then 3 to come back to a premium so that you can sell in the premium. And if you don't know what this is, I put a Fibonacci line up here, and I just got the 50%, which gives me the equilibrium, and anything above 50% is premium, anything below 50% is discount. So it took 1, 2, 3 days for it to play out. Now let's go down to we're just going to go down to hourly charts. We could go lower, but we're just going to go to hourly charts, and we're going to go back to that highlighted area, right? That highlighted area. Now, looking right here, here we go. We come up. So on Monday the 1st, right? This is the day that we took out the high, right? Remember this line. This is the day we took out the high. So we came up and we took out the high right there, right? And then we rejected. You see this right here? We came up on this hourly calendar. It was a nice little rejection, nothing to write home to mama about. But then look at this right here. Pow! Oh man, I just gave it away. But can somebody please put in the chat what we call this right here? I think ICT called it like distribution or whatever. But what do we call it? What do we call this right here? This move from that high to this low down here. What do we call that? Right? So now get a Fibonacci tool, right? We came up here, we took out. You better. That's what we call it. Nah, we don't call it change of character. We call it the Spider Gang call it That's what it is. You hear me? Right? So we took out sell side. I mean, we took out buy side liquidity, right? We had a breaking market structure right here. We broke lower right there. That gave us our bias, right? Just give me something. I ain't got no template for this. I don't have a template for this, so we're just gonna type it out real quick. All right, so we got a bearish breaking market structure, right? So now price is bearish, right? Because we came up, we took out the liquidity, we got a rejection, we got a bearish breaking market structure. So now we got our bias of our bearish bias after taking out liquidity, right? And then we came back up here, right up here, came very close to that imbalance there. You know what I'm saying? But if you look over here, we got us a nice breaker right over here. The wicks do the damage, the bodies tell the stories, right? You know, ICT always say that. Wicks do the damage, body tell the stories, right? And if we come over here with our handy dandy rectangular tool, right? Come to that old breaker there. Wicks do the damage, bodies tell the story, right? Come right there. And then also, if we get our Fibonacci tool and run it from that high to that low, see there? The breaker, this breaker is down here, is still where? In the discount. Price moves back up to equilibrium. You're going to go to equilibrium or premium because this is equilibrium is fair value. So it's a fair value to sell. It's a better value to sell in a premium, but it's a fair value to sell, right? And then guess what? Boom. Dropped it like it's hot. Now, that on hourly candles, 12 p.m. was when we broke the structure and got started the rejection at 12 p.m. on Monday the 1st, right? And then on Tuesday at 3 a.m. during the London, that's when you got your entry, right? But on the daily candles, and you probably got something earlier than that, entry like lower intraday, but on the daily candles, it took you, you know what I'm saying, 3 entire days for it to set up. So the higher the time frame, right, the least setups you're going to see, but price is fractal. So you're going to be looking for the same thing no matter what time frame you trade. Time and price. What we at? Time, price, bias, draw. What was our quotes? Time, price, bias, draw, right? That's all we worried about. Time, price, bias, draw. Right? Time, price, bias, draw. Right? Now, let's put it together now let's talk about the draw. That's the bias. Are there any questions about bias? Speaking extemporaneously. Exactly. Are there any questions about bias before I move on to the draw? Are there any questions about the bias before I move on to the draw? And then we're gonna get to the good stuff now. I pointed out like the difference between waiting for entries, but we still ain't got to the good stuff about the entries yet. We still prepping. We still working on the prep work before we even get to entries yet. Are there any questions about bias before we move on to the draw? Yes. So bias is the trend of the no, the trend is the trend. The bias is the bias is the direction that the market is showing that it wants to trade, that wants to move in. The bias is the direction that the market is giving you hints that it wants to move in. Like trend is like different. Trend is like the overall direction, right? Trend is the overall direction. Bias is the direction that the market is showing that it wants to go for that time frame, that time period, that dispensation in time, if you will. Is that how you get your setup? It has to align with bias. That's what I was saying. If it aligns with the bias, wee. If your entry model sets up and the intraday bias aligns with the overall bias and aligns with the overall trend, wee. Boy, you better pull out the big guns, the big contracts. Trend is current, bias is what's to come. Hey, there you go. Well said. Well said. Trend is current, bias is what's to come. Yeah. I just say the bias is what the direction the market is showing you that it wants to move in. And the trend is the over, like you can, when you look at the chart, you can see the trend, but you have to really inspect it to determine the bias, right? Because the trend gonna be apparent. The trend gonna be sticking out, right? You either gonna be trending up, down, or sideways. It's gonna be apparent, right? But when it comes to the bias, you got to start reading those candlesticks. Now, any other questions? Any other questions? Now, if it is, just drop it in there. Draw. The easiest way for me to determine the draw on liquidity, right? The easiest way for me to determine the draw on liquidity is once we take out liquidity, right? If we reject, right? If we reject, and I don't confuse it with bias, but I said some of the same stuff with bias, but listen to what I'm saying now. This, if you take notes, this is when you write it down. When you're trying to determine draw, after taking out liquidity, this high on Tuesday, April 18th, right? We took out this high on Monday, May the 1st, and we reject it, right? Right? We reject it. See this long wick up here? Rejected hard. Came all the way back below the high. So that's a strong rejection, right? The reject, it ain't got to be as strong as this, but long as it's a nice rejection, hey, but when it's a strong rejection like this right here, and if we reject after hitting a higher time frame draw on liquidity, wee, boy, that thing carries some weight. Rejecting after you hit a higher time frame, and this right here, now mind you, now this Tuesday, April 18th, right? That's in a total different week. So that's a weekly high. That's from a previous week. So that's a weekly, like when we came down, it's a whole heap of liquidity up here because this from Tuesday the 18th. Let me see what Tuesday, April 18th was. So Tuesday, April 18th was there on a Tuesday, of course. And then almost 2 weeks later, On May the 1st, we came back and took out that high, right? So that's a higher time frame liquidity pool that you just jumped into. So that's a higher time frame destination. And then you got a rejection off of it. So that heightens the possibility of a reversal because you just ran into a higher time frame PD array, a higher time frame liquidity pool, and got a rejection. So when that happens, if you hit a higher time frame liquidity pool and reject, now the draw, you look to the opposite end of that price leg, right? You look for the low or high that sent you there. If you reject, the low or high that sent you there is now the draw. You look for the low or high that sent you there. That's now the draw. If you hit a higher time frame liquidity pool and reject, the low or high, the low in this case or high that sent you there, right? This low, let me move all this stuff out the way. Right? This low sent us to this high, and we took out that. I didn't do that. Took out that high, right? And then we came down and took out that low, right? Right now, bear in mind, this becomes the draw. You do not have to get to the draw. That's just the draw. If you hit a higher time frame liquidity pool, right? No matter what time frame you're on, when you hit a higher time frame liquidity pool and reject, you look to the low or high that sent you there, and that becomes the draw. If you hit a higher time frame liquidity pool and you do not reject, right? You look to the left, right? Either higher or lower than where you were, and that is your draw, right? And that is your draw. If you hit a higher time frame liquidity pool and you don't reject, right? That you look to the left, either above or below where price is, and that is your draw. Looking for another liquidity pool. Do you have to get there? No, you don't. Right? Me personally, I make my external draws on liquidity swing highs and swing lows. That's what I mark as my external draws on liquidity, right? Remember those swing highs and swing lows I asked y'all about earlier, right? When I was like, what are these? What are those? Right? When I was like, what are these right here? Those are my external, see, these are my external liquidity. So over here, when we broke this liquidity here on the 18th, right? On the 1st, when we took out the liquidity on the 18th and rejected, then we look back to the low that sent us here. That's Wednesday, the 26th, right? That's the low that sent us there. Now this becomes the draw, right? Do you have to get to that draw? No, you don't. Now, here is like the key to it all. Now, this is what it looks like when doves cry. This is what it looks like when you first take out the liquidity and reject, right? So now, this is your draw. Let's get my draw. Y'all know I like to put over here for my draw, right? There's the draw, right? So now, come here, draw. Right? So there's your draw. Now, this is the draw. Boom. That's your draw because we took out this liquidity pool, right? Let's make us a little liquidity pool up here. We're going to draw us a little liquidity pool. Boom. Right? We draw us a liquidity. I just don't pay no attention to it. It don't matter what size it is. I'm just showing the money up there. That's where the money reside, right? That's where the money reside, right? Boom. Right? So we came up here, took out that and rejected. Now, we look at what we left in the wake, right? What we left in the wake, right? In the wake of taking out that liquidity and rejecting off, right? Right. We got a BISI, a daily BISI there. We got another daily BISI right here, right? Got a daily BISI there. We got a daily BISI there, right? We ain't gonna go through marking out everything that we got here. We ain't gonna, we ain't gonna go through marking out everything that we got over here, right? All right. So we just gonna focus on cause I ain't trying to make it all about which PD array do I need to use. I'm just pointing out the ones that's liquidity driven, right? So these are because price is seeking out, it is drawing to liquidity, right? Remember what I said, you got liquidity pools and then you got imbalances and voids. There's all what type of liquidity is still needed in a BISI, right? Somebody put in the chat while I read this comment out, right? What type of liquidity is still needed in a BISI? If you got a BISI, what type of liquidity got skipped? What type of liquidity did not get offered? Right? I'm gonna chop this up and show Timmy Rogers trading pyramid pat. Get off my live. Very good. Sell side. Very good. Very good. Sell side liquidity. So for anybody who don't know what a BISI is, a BISI is a type of fair value gap, and the fair value in BISI stands for buy side imbalance, sell side inefficiency, meaning it wasn't sufficiently dealt sell side. And a SIBI is the opposite. It's a bearish fair value gap, meaning sell side imbalance. There's an imbalance of sell side. It offered a whole lot of sell side, but didn't offer a lot of buy side. So it's a sell side imbalance, buy side inefficiency, buy side imbalance, sell side inefficiency. That's what the BISI and the SIBI stands for, right? BISI, right? So I'm only pointing out the liquidity because that's what the market is always seeking. It's always seeking liquidity, right? So now you don't have to get to the draw, right? Where is the liquidity in this price leg, right? Where's the liquidity in this price leg? The liquidity in this price leg you got some in this BISI there, you got some in this BISI there, and you got a whole bunch of it up under this swing low right here, right? A whole bunch. It's a liquidity pool under this swing low right here, right? So now looking at price here. So we came here, pushed down through this BISI on the daily. We pushed down through this BISI, the daily count. I'm pretty sure with some trade ideas on the intraday, right? Pushed down through this BISI, right? And wicked back up, right? Wicked back up. Now, follow me. Y'all already seen the answer, right? But right here on this day, on May the 2nd, right? Looking at this daily candle when it closed, right? What's the daily bias going into the next day? What would the daily bias going to the next day, and what would the draw on liquidity be going into the next day? Right? Put in the chat what the daily bias from this May the 2nd candle at the close, what's the daily bias going into the next day, and what's the draw on liquidity going into the next day? While I take a sip of water. I got a bearish, I got a higher, I got a bearish, I got a bullish with a question mark back up to the high from the day before with a question mark. Is that a question or an answer? Bias is bearish, bearish, bullish. Anybody else? Bearish, bullish. I think bullish because we close body over the wick. Congratulations, you will be thinking correctly. Right? Remember, we took out the liquidity and we got a nice rejection, right? So this is, we're looking at just this daily candle right here, thinking about going until tomorrow, into tomorrow, right? Right? We got a rejection, right? Not only did we get a rejection, we closed above the low, right? So when we take out liquidity and close, and when we take out sell side and close above the low, right? That's the mark, that's price saying, yeah, I kind of want to go that way, but I got something I need to do up here first. Or it's saying, yeah, I went that way, but I'm ready to go this way now. Right? Right? So the bias right here for going into the next day, it has temporarily shifted to a bullish bias with a bullish draw to this high right here, right? This is the draw because we came down and we took out that low there, either this high or that high, these daily candles, but I'm just going with this candle right here, but it can be that we just gonna use the swing high. We're gonna use the swing high, right? So we took out this sell side, we rejected and closed above the low. So now the bias can possibly, is saying I want to possibly shift my bias, right? I'm not changing the trend, right? I'm not changing the trend. I'm just having a shift in bias, right? having a shift in bias, right? So the draw, right? We rejected off of this liquidity. We came below this low, right? This is a daily low. So you got a daily low. Below a daily low, there's a liquidity pool below, even though it's not a swing low, it's a daily low. There's a liquidity pool that rests under daily lows. Because when you go into the intraday, there's a swing low down here somewhere. So there's a liquidity pool under a daily low. So you've hit a liquidity pool, right? You've also hit a internal, right, PD array that holds liquidity, right? And we've rejected. So the algorithm has came down and soaked up a whole lot of liquidity, right? And rejected, right? Now, if we run the Fibonacci tool, where is this fair value gap? Where is that daily low on this price leg? Is it in a premium or a discount? Hey, big talk show. Get off my screen. Where is this fair value gap, and where is that daily low? This is really great. I like the way you break it down. I like it when you do that right there. Thank you very much. Again, where is this BISI and this daily low on this price leg right here? Discount, 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 laughing, discount, discount, discount. Right? Remember what we said over here? Remember what we said over here? Where is it? Sell in a premium, buy in a discount, right? Right. So as price, discount, discount. As price moved down to a discount, right? Smart money started accumulating longs down here in this discount area, right? How do you know it accumulated a whole heap of longs? Because we rejected and closed back above this low and closed above this BISI, right? So now the bias has potentially shifted bullish, and the draw has definitely shifted to the high because we took out the sell side and rejected. When you take out sell side and reject, you look to the high that sent you there, and there is your draw, right? Come on, draw, act right. There you go. I don't know what's going on with my draw. Oh, I got the snap on. There you go. Boom. So there's your draw. Right? Let's move over. Right? Remember what I said. Do you have to get to the draw? Do you have to get to the draw? No, you don't. What do we expect PD arrays to do when price is below the PD array? What do we expect the PD array to do when price is below the PD array? We expect it to act as what? While I sip on some water. Somebody put it in the chat. Somebody put it in the chat while I sip on water. When price is below a PD array, we expect the PD array to act as what? Resistance. Resistance. We expect it to act as resistance, right? So, even though we've traded through resistance, right? Even though we traded through this BISI, Are we finished with that? Resistance. Are we finished with that, Bissy? Just because we offered the sell side? We offered the sell side. Are we finished with that, Bissy? No, no, no. Now that we're below that Bissy, we're expecting that Bissy to act as resistance. And why are we expecting that Bissy to act as resistance? Right? This is one of those things that listening to one or two videos cannot teach you. Right? This is one of them things that listening to one or two videos cannot teach you. This Bissy, right? This Bissy right here was created, right before we took out this higher time frame liquidity pool, right? So since it was created right before we took out a higher time frame liquidity pool and we rejected, this Bissy was expected to be a speed bump and not support. Because even though price was above this Bissy, it was not expected to be support because we just took out higher time frame liquidity and we rejected. If we would have taken out higher time frame liquidity and showed a continuation, then we would expect this Bissy to act as support and keep price up. Right? Now that we expected it to be a speed bump, meaning we just come through it and maybe dilly-dally here on the intraday level, but once we break through it, now we expect it to act as resistance, or as ICT put it, an inversion gap. And an inversion gap is just a PD array that has been traded through, and we're on the opposite side of it now. So if you're below a bullish fair value gap, it's an inversion gap now. If you're above a bearish fair value gap, it's an inversion gap now. It just means you're on the opposite side. So the job has flipped. The roles have reversed. Instead of being support, it's now supposed to be resistance. So when we started out this day, the bias and the draw had shifted here. We were anticipating it to come back here. Why were we anticipating to come back here? Because up here, when we rejected, we wanted price to come down and pick up some liquidity so that it can turn around and buy the bus ticket so that we can get short. Woo! Boy, I just said something just did. Hold on. What that? Let me get 30 seconds of a beat, Water. Hold on. I got to get on my Wall Street Trapper. Hold on. Y'all ain't, hold on. I'm going to say this again, then Water going to give us 30 seconds of a beat. Hold on. Wait a minute now. We expected this right here to be resistance. Why? Because when we were over here and we took out this buy side liquidity and we rejected, right? Now we are anticipating price to run over this imbalance as a speed bump, come down and get into a liquidity pool for somebody who got long over here and wanted to go up, come rob them of their money, take their money, soak up that liquidity so that we can come back up to the premium where we are chilling and waiting so that we can get on the bus and get short. Woo! Whoa, give us some of a beat. Give us some beat. Woo! Oh my goodness. I need 30 seconds of a beat. Woo! Woo! Oh my goodness. Oh my goodness. Oh my goodness. Okay. Okay. Now. So the bias up here had shifted bearish. The draw up here has shifted to the sell side, right? So we were anticipating price. We're now, if your trading model is trading turtle soups or turtle soup sales, then this is where you would be trying to get in up here on the attack of the liquidity. But that's not what we're doing, right? That's not what I'm talking about. I'm talking about my model, right? So the bias had shifted bearish. The liquidity draw had shifted here. That was the draw, right? So now we're anticipating price to come down to a pool of liquidity somewhere from the people who got long down here. And when we pushed up here, they moved their stops somewhere. We're expecting us to come attack their stops, soak up some liquidity, preferably from an internal liquidity source like a daily low, of imbalance, a fair value gap, right? And what's the difference between this fair value gap and this imbalance right there, right? Why is this the fair value gap on the way down and this just the imbalance? Can somebody put that in the chat for me? This top imbalance right here. Why is this just an imbalance? Why is this just expected to be a speed bump? Why are we expecting just to run this over and we're anticipating this to act as a fair value gap right here? Can somebody explain that to me in the chat? Just drop it in the chat, if you will. Premium versus discount. One is in the discount, right? In this case, since price has shifted, the bias has shifted bearish and the draw is sell side, right? Where do you want to buy? You want to buy in the discount. Where is fair value for buying? Fair value for buying is at equilibrium and below. So since this imbalance is below equilibrium, as you're coming down, right, the fair value resides below this 50% line. So in this case, this is the fair value gap. So this is just an imbalance that gets ran over, right? Now, it's some fair value in there on an intraday level at some point, right? But in this scenario that we're looking at, this overall arching move, this is the fair value. So we come down to a fair value gap. We come down to sell side liquidity under this daily low. We soak up the sell stops. We reprice the fair value gap, right? And once we reprice it, what do? We leave it, showing the rejection right there. So once you reprice a fair value gap and then leave it, now this fair value gap is now balanced because you repriced it and you left it. Once you leave it, it's balanced now. So now with a balanced price range, right? If price wants to continue in this direction, it's going to cut through it like butter. If it wants to go the other way, it's not even going to touch it. It's going to reject off of it, right? It's going to reject off of it. Tim, are you sure about that? I'm very sure about that, because look up here at this top imbalance right here. We had buy side here, sell side there, and we left it. When we came back to that imbalance, like a brick wall. Resistance. Resistance. What do you mean by repricing? Offering the opposing liquidity. Repricing is just offering the opposing liquidity. So on a buy side imbalance, sell side inefficiency, you reprice it when you offer the sell side. On a sell side imbalance, buy side inefficiency, you reprice it when you offer the buy side. So we came up here, we offered sell side, and we left it. So now that BISI is balanced. We offered the sell side, and then we left it. We just left it in another direction. We came here, offered it, and we left it in a continuation. We came here and offered it, and we left it in a rejection. When we came back over here, remember this day, the bias had shifted to bullish, and the draw had shifted up here. And now we're anticipating this to be resistance because it's been rebalanced. And remember, from up here, our draw is down here. We just wanted price to go down there and get some liquidity because the big boys need liquidity to make their moves. They had to go get their bus fare so they can come back and get on the bus to go short. So when we came down here and soaked up all this bus fare, the next day we opened up right here. And where did it go? It went up towards this draw. Where did it stop? Right there at that balanced price range right there. And what did it do? Drop it like it's hard. And when we came back to this fair value gap, what did it do? Cut through it like butter. Cut through it like butter. Right? Did exactly what we wanted to do. But in this scenario, when we want to get short, right? Once it came back up into the premium, right? This is where we will be getting short on the overall time frame. Remember, we took it out on this day. This day is the day that gave us our bias and our draw. This day right here was the day where we looked for our entry, right? We're not going to get in down here because we're trying to sell. We wait for it to come back to a premium, and then we sell in the premium. Then we drop it like it's hard. And then you see, as you see, we continued down and took out the sell side. And then you see again over here, when we came here, boop, stop there, stop below, saying, hey, I want to go down. I want to continue down. What's the draw? Right? There's your draw right there. Right? You came, you closed below that low. What's your draw? We close below the low, so you come down and to the left. That's your draw right here, right? What do? We gap down, came back up into a premium. What do we stop at? That resistance. Dropped it like it's hard. But this time, we reached the draw. We got to the draw, right? Wait a minute, Tim, you said we came back to a premium, but this ain't the premium. Yeah, it is. Yeah, it is. That's the premium right there. Why is that a premium? Because we've come down. We've come down below all of this right here, right? So price don't want to go back up there, right? So price ain't looking at all of this up here no more, right? Price ain't looking at all of that up there no more. Price is only looking, you know what I'm saying, from the close of this candle down, because all of this right here is a balanced price range, right? Because we came up here and we remember we left this area, so we came back through. We don't need this area right now, so we cut through it like butter. Now that we cut through it like butter, now we're expecting this to act as resistance. So when price starts pushing back up, right? It's pushing back up into a premium, right? Got all the way up into a nice premium, and then dropped down and took out the draw, right? Took out the draw. I appreciate that. Good God Almighty. Good God Almighty. I appreciate that. I appreciate that. All right. Now, my light done died. I've been let him cook. Now that we done talked about the bias, the draw, open, high, low, and close. Open, high, low, and close. Figure out, keep it simple. Keep it simple. Right? Open, high, low, and close. Selling the premium, buying discount, bias, and draw. That's all we've been talking about, right? That's all we've been talking about the whole time. We ain't been talking about nothing else. We ain't been talking about nothing else. We've been talking about the draw, explain the price action, balance, already part. Okay, for a balanced price range, right? Once you offer sell side and buy side, when price leaves that area, now that's a potential balanced price range, right? It can be in the form of a fair value gap. It can be in the form of a liquidity void, actual gap. It can be in the form of just candles in consolidation like this right here, right? It can be in the form of candles in consolidation. Once price offers buy side and sell side, and then once it takes off and leaves that range, just say we blast off and went up here, or we blast off and went down there, or whatever. You know what I'm saying? Once you leave that range after offering buy side and sell side, now that's a potential balanced price range. And price, if price wants to have this price range right here, got repriced and then balanced when we left it, right? If price wanted to go back up, it would have cut through this like butter. But we had just run out buy side liquidity here, and the draw was down there. And we're not looking for the reversal just yet, because we didn't take out the liquidity down here. We didn't take out the external liquidity, right? It's possible that we could come down and get into a deep discount and then reverse back up. And that's why I say whenever we take out sell side, a reversal is always possible, but it's all about the higher time frame draw. So the higher time frame draw was still here, and we hadn't met the higher time frame draw. So until we meet the higher time frame draw, or we come back and void that this is well, validate that this is no longer the draw, then we keep anticipating the draw. Thank you. Was compressing and coiling for a break one way, the other tightening. I don't use compressing and coiling and all that right there. That's like, that's like retail logic of like, I hear people say it all the time, like coiling and compressing and it's gonna be like a violent move when you release it. I don't use those terms. I you know what I'm saying? I don't use them terms anymore. So I really don't know how to compare it to what I'm saying. I understand what they're saying, but I don't know how to compare it to what I'm saying. You're welcome. Okay. Let's get into the meat and potatoes of it, and then we're gonna call it. So now, everything that I just went through and said, right? Everything I just went through and said, that's all a part of my everyday entry setup. Everything that I just said is all a part of my model, right? I look for the higher time frame bias, right? I look for the higher time frame draw on liquidity, right? That's what this picture was right here, right? That's what this picture right here was, right? So we um we had come down and we was rejecting off of this area down here, right? Rejecting, right? And so I know when I used to just trade off of retail logic, I'll be like, hey, these are creating lower highs and equal lows and whatever this mannequin body part may be. But it's like the highs are getting lower, right? But now what I look at when I see a scenario like this, right? We come down, right, to the sell side, we reject, right? We come back down, can't make it to the sell side, reject, come back down to the sell side, reject, come back down, can't even make to the sell side, reject, right? Come back down. Now that we've come back down here, we're starting to reject. We can't make it to the sell side. So now sell side has been offered multiple times, right? Multiple times sell side has been offered. 1, 2, 3, 4, 5, like 5 or 6 different times sell side has been offered. How you know what they called it? This right here is a form of engineering liquidity, right? This is a form of engineering liquidity, right? So when you see sell side being offered, and you keep rejecting off it like this right here, but look at all this right here. We never went above this weekly high right here, right? This weekly high right there. We never went back above that weekly high, right? And we're rejecting, we're offering all the sell side, but we keep rejecting, right? So remember what I said, whenever we reject off of sell side, we look back to the high that took us there, right? So you're constantly looking back to the high that took you there. Every time it's still rejecting, right? So you're constantly looking back to the high that took you there, right? So when we come down here, right? Come down, get below this low, reject off of it. So now, which direction am I looking? Back to the high that brought me there, right? The high that brought me there. This is the daily high. This is the daily low. This is the prior day's high over here, right? It's the prior day's high over here before this day. So I'm looking for the high that brought me there, right? So I got these imbalances down here because we're so close to this low. If price wants to go down here and soak up a little bit more liquidity before heading up, hey, I'm cool with that. That's why I got them there, because anytime, if you're a note taker, write this down. Anytime you got a liquidity pool combined with an imbalance, right? Like this weekly high combined with a daily fair value gap, this daily low, probably a weekly low, combined with a 4-hour fair value gap, a swing high and swing low combined with a fair value gap is delicioso to the algorithm. That's like a draw on steroids. Ooh, draw on steroids when you got a imbalance sitting right on top of a swing high, or imbalance hanging right below a swing low. Algorithm love to see it. Love to see it. Just look what it did today. From 12 o'clock up until 4 o'clock, what was a steady march up to that weekly buy side liquidity up there with that fair value gap up there. Whew, love it, love it, love it. Now, let's jump in here and we're gonna get straight to the meat and potatoes. I'm gonna take you into all the way toward the afternoon time when we and I'm gonna give you an example of even though this is I'm gonna give you an example of using the bias against the grain with an SPX trade that I actually took today, this afternoon, going short right over here. Right. And I'm just using this as an example because this was a super bullish day, right? This was a super bullish day, right? My bias was up, my draw was up, right? If y'all remember on some of the other screenshots that I sent out, I had the magnet sitting up here on the top with the NQ, the ES and all of that. I had the magnet sitting up on top up there. I'm trying to see if I got any other pictures. Nah, you can't see it on that one. I was trying to see if I had any other pictures where you can see the magnet on the top. I don't think I got none of them with the magnet. But y'all remember the magnet probably just ain't in there. We had like magnets on the top. I can't see the pictures. They like kind of small. Uh-oh, that's a video. Anyway, I'm tired of looking. But y'all know what I'm talking about. Had like the magnets up on top. But so now, let me put my other stuff back on from today. And then we're gonna break down, like I said, everything that we just went through is what I do on a daily basis, right? So I've broken it down to hourly candles, right? I've broken it down to hourly candles, right? So remember what I was talking about where we was over here engineering all this liquidity here, right? We was over here engineering all this liquidity right here. We just engineering, right? So whenever you see liquidity being engineered like this, right? When your setup starts to form, that area where the liquidity was being engineered, right? The lower the time frame it is, the quicker the reaction is going to be. Like, oh, this is over a big time frame. So what the algorithm is doing, it's busting people in the head, right? It's busting people in the head. Anybody who went long here, right, when it came down and went up there and they trailed their stops there, it came and bust them in the head, sucked it up, ping out, right? See how it's consolidating here, all this consolidating there. You see our price dropped below it and then took off, right? It engineered liquidity, dropped below it, took off, right? So anytime you see it like engineering liquidity, depending on the time frame, so we went below here, went below there, couldn't even get below here. We came back to an imbalance. So this right here, this part here, this right here, this is when the algorithm starts to really tip its hand in this area right here, right? If you notice, right, coming back over here, we came down, right? When we ran out this liquidity here, we took off, right? When we came back down this time, see, we pushed past these imbalances, well past these imbalances, right? And closed way out, just disrespected these imbalances, right? Right? Came down here. We pushed back up again, pushed all the way up, failed short, then come over here. Why? Because we got some long Newswick type candles right here. So these Newswick type candles like this right here, this isn't true price action. That's just a Newswick, right? So what price had to do was it had to come all the way back up to offer the buy side for real over this imbalance, this imbalance, this imbalance. So once it came back up and offered buy side to all these imbalances, it came back down again, right? Took out anybody who had trailed their stop to there, even came down and kissed this area down here for anybody who still had stops down here who didn't trail it the first time, right? So then what did it do? It pushed back up and it offered buy side to these imbalances here, right? Came up, offered buy side. Once it offered buy side to all these imbalances, what did it do? It stopped. Then it came back down and caught anybody lacking that trailed their stops right here, right? And this is what I'm saying about it's telling its hand, it's tipping its hand, right? Because all it's doing is going back and forth, making sure everything has been repriced, right? Everything has been repriced, right? And then when you come over here, right? See this Bissy right here, right? You see that big Bissy right there, right? That's the actual Bissy right there. But we came into it here, pushed up, came back down to it again, right? So we came there, pushed up, left that piece, came back down to it again, left that piece, right? Went back up, offered, repriced all of these, right? Then we came back down again. And then look at this time what happened, right? When we got to it, we stopped. Then we came down, repriced it, the last piece of it, and then left it, right? When we left it there, now we've repriced it and there's no more imbalances, right? On this level, on this hourly level here, there's no more imbalances in here. There's still one little small piece of a 5-minute imbalance down here. But other than that, there's no other imbalance before you get to the sell side. So once price repriced this fair value gap, it left it. And then when we opened up this day, we had a new day opening gap. We gapped down, right? I think we gapped down. Yes, we gapped down. New day opening gap, we gapped down. We came back down to this imbalance right here, right? Came in there, some lower time frame stuff in there that we handling, right? But guess what? It acted as support, pushed up, right? Came back up, came back down where? To the new day opening gap. Look at the bodies of the candles, respecting the new day opening gap, even though we gap down, offered the buy side, offered the sell side, and then we left it, right? Right. We gapped down, right? Meaning it was a full liquidity void, right? Offered the buy side, offered the sell side, and then we left it, right? So now that's rebalanced. Came down, came to the low of it, body wicks do the damage, body tell the story. Came down just below the low of it, got the mohawk for anybody that was looking to get long or anybody that was looking to get short right here. They just got anybody who was sitting right here waiting to get short. Oh, this little mohawk right there, ICT called it a mohawk when it just pokes outside of the imbalance just enough to pick up orders. Anybody that was waiting to get short right here, trying to play a breakout to the downside, oh, they just got smoked right there, right? Or anybody that was waiting to get picked up right there, they just got picked up there, right? And then I was saying bye-bye. You are my friend. Now on the hourly, well, actually today, I didn't even get offered anything, you know what I'm saying, to the long side today from like the time that I was actually watching the chart. I didn't get offered anything, right? But no harm, no foul, right? Because the market always presents another opportunity. But I just wanted to show all of that we just talked about in action. Now let's go down over here to this area and let's talk about my actual setup. Now, this high right here is a weekly high, right? Mind you, my draw when I sent out the picture was the daily high and the buy side above this May 15th swing high right here, right? That's the picture that I sent out. All right, that's what I was targeting right there, getting back up to this and maybe that. I wasn't targeting that yet for the because that was my weekly high, right? But we got all the way to my weekly high today. So for today, right, the algorithm just started spooling. It just spooled all the way up. Nothing you can do. Look at this. After this Judas swing right here, after this 930 Judas swing, you know what I'm saying? We poked up above this buy side right here and dropped down. That's a Judas swing right there, right? Came above this 12 p.m. high right there, right? From Tuesday, that 12 p.m. high from Tuesday, right? Dropped down and then took off immediately. Didn't ain't give nothing. If you notice on the way up, look what price did on the way up, right? Look what price did on the way up, right? On the way up, look here. You don't see not one hourly imbalance at all. So price made sure not to leave any imbalances at all, right? Made sure not to leave any imbalances at all. And then once we took out this buy side, it came all the way down on the Judas swing and it stopped at this perfectly rebalanced new day opening gap and then reversed and started to spool until it came to a weekly, which is a higher time frame PD array, right? Now, for intraday trading, right? For intraday trading, whenever you come to a higher time frame destination, I call them destinations. Whenever you come to a higher time frame destination, I'm not going to get into the divergence because I'd look at SMT divergence, but I don't feel like explaining all of that. Excuse me. So we're not going to get into the SMT divergence, right? But I would everybody, all the spider gang know when price reaches my higher time frame draw on liquidity, my higher time frame destination, I look to the DXY, right? I look to the DXY for divergence, right? I look to the DXY for divergence, right? Right? Look to the DXY for divergence. When I right there, what did I do? Right? I look to the DXY for divergence, right? When I reach the destination, I look for the divergence, and then if I see the divergence, I'm like, okay, divergence is present, right? And then I drop to the lower time frames and start looking for the same thing that we've been talking about from the beginning, right? Did we get rejection? Right? Did we get rejection? If we got rejection, did we get a break in market structure? If we got a break in market structure, did we make a run on liquidity to get the bus fare to go back home? Did we get the bus fare, then run back and get on the bus? Needs a time to get on the bus to go short or go long, right? So now, boom, right? We're going to put a little box around this here when we reach the destination, right? So this is when we reach the destination here. So this candle there, we're going to go from here over to here. All right, once we take out the buy side. All right, so there we go. Now let's drop. We're going to drop all the way down to 5 minutes. We can go all the way down to 1 minute, really. right? We can go all the way because I be dropping all the way down to 1 minute. I ain't even gonna hold you. But we can I'll show it on 5 minute because the candles are bigger. The candles are bigger and it's easier to see than if I drop all the way to 1 minute. Why are they moving? Oh, that's a picture. I'm sorry. I thought it wasn't moving. I was looking, it was a picture over there in my way. Okay, so right, here we go. Once we start attacking it, drop to the lower time frame, right? So we hit the liquidity, right? That daily fair I told you about when you got buy side combined with an imbalance, delectable to the algorithm, right? So look at that. When we come up here, we get up here, wicks do the damage, body tell the story, right? So if you notice, we come through, kind of paused a little bit there, right? We left a volume imbalance right here, pushed up, wick through the outside, came back in, right? Right. Came up, poked above it one more time, came down, right? We still got this volume imbalance right here. Remember, when you got a volume imbalance, it'll act as a magnet to price until it reprices it and rebalances it. And ICT say he keep them on his chart until they lay a body across the candle, right? I mean across the imbalance, the volume imbalance, right? So then look what we did right here on this candle right there. This 2 o'clock candle, right? Time and price. Remember, time and price. So now we hit this area at 1:30, right? From 1:30 up until like 3 o'clock, time, right? Time, right? Price. Where are we now? We just reached a higher time frame liquidity pool, right? We just reached a higher time frame liquidity pool. So now we're looking for a rejection, right? So we come up here, poke above there, come down, right? Get inside the volume imbalance, come back up, stop, tick for tick with the daily fair value gap, tick for tick this time. Come down, right? And immediately fill in that volume imbalance immediately, right? So then when we come down, we got fair value gap right there. Right, let me mark this out. Take all this other stuff off. Got Doggy Tim. I want that line. I want this line right here. So that ray right there. All right. So higher time frame liquidity pool, right? Remember that 2 o'clock candle time. We're in the 1:30 to 3 o'clock window. It came to the exact high of the fair value gap, right? It's the fair value gap because we're in the premium and we're looking for it to, you know what I'm saying? We're looking to sell off of it. We're looking for the big boys to sell off of it, come up there, and we're looking for it to resist price because price was below it and we wanted to resist price. So we go up in there, we reprice it, right? We reprice it, pushing up, right? Offering the buy side, right? Because it was a which was it? Let me see, make sure. Yes, it was a bearish fair value gap. So we offered the buy side. I need to put that back up there so I can see it. That one. Man, which one of them rays is it? Okay, they're right next to each other. There you go. Now, right, I can move this out the way. Now I don't need that no more. Right, went wick for wick with it. Now that we've, right, We've offered the buy side, and then boom, we left it. We left the area, right? We come down, right? And this is on the 5 minute right here. 5 minute right there, right? We come down, take out that swing low right there, right? Come there, take out that swing low right there. And then if you notice, this low right here came up above, took out, came up here. This is buy side. So we got low, came up there, made that high, made that lower low. So there you go. You got a breaker right there, right? And on the lower time frame, I looked at it on the lower time frame, but I'm just showing you on the 5 minute, right? I'm just showing you on the 5 minute right here, right? So we got a breaker right there, right? And we got fair value gap right there. Uber hard to see all this stuff with all this stuff overlapping. Right there. So price came down, fair value gap there, right? Price come back right here. And you notice, right? Came down, came back up, immediately went back to the top and stopped where? Right at the top of the breaker, right there, right? Went up there to the top of the breaker. Boom. Tick for tick with the breaker. Bought my SPX puts as soon as we came into this fair value gap that's lined up with this breaker, right? As soon as we got there, then boom, price dropped. Went down, boom, got my 100%, was out of there, right? Target was this low-hanging fruit right there. It hit 100% before it got to the low-hanging fruit right there. Why was that a low-hanging fruit? Because that's the first swing low below this low right here, right? This was the low when we came and picked up the money out of the liquidity pool, right? So here we go right here. Let me break it down for you, nice and slow, right? I'm finna draw, y'all. I'm finna draw. I know we've been on here a long time, but I'm about to draw. I'm about to draw, and then we're gonna wrap it up. We've been on here for 2 hours. I ain't even expect this to go this long. I ain't gonna hold you. I ain't expect this to go this long. All right. So we got higher time frame. Mad ugly. Higher time frame liquidity pool. Yes, that is a Q. Don't judge my Q. Right? Higher time frame liquidity pool. That's above this right here. Buy side liquidity. Buy side liquidity. That's higher time frame liquidity pool, right? Weekly buy side liquidity, right? Right. So we got weekly buy side liquidity, which is our higher time frame liquidity pool above this high right here, right? I mean above this line right here, right? So on the 5 minute, we got the breaker. This is on the 5 minute. I'm gonna drop down to the 1 minute in a second to show y'all something else. So we got the 5 minute breaker, right? We got a 5 minute fair value gap right there. All right, we come down. Now this right here is the area where we rated on sell side, right? That right there was the rate on sell side right there. That right there is what you want to see when, no matter what time frame you're on, if you're trying to get short, that rate on sell side is what you want to see, right? Because most of the time, this rate on sell side will yield you a breaker. Now, and all my setups, when, like, if this low did not come up and take out a high and then we broke lower, right, it would be a mitigation block over here. And my success rate with it being mitigation blocks combined with a fair value gap was lower than a breaker combined with a fair value gap, right? So that's why my primary setup is the fair value gap combined with a breaker, right? And then it get real juicy when you got a breaker, a mitigation block, and a fair value gap. I'll show you that on the 1 minute. Now, so this was the raid. This is the raid on sell side after we hit a higher time frame destination, right? Higher time frame destination, right? The Pang, we got the Pang, we got the breaking market structure, we got the raid on sell side denoted by the rejection, right? We came down and we rejected. What's the draw when you take liquidity and reject, right? What's the draw when you take liquidity? Am I lagging? Because when I look up, I can see myself still looking down. Hope I'm not lagging. When you take the liquidity and reject, the draw is back up here now, right? You don't have to get to the draw, but that's the draw. We're not expecting to get there. Why are we not expecting to get there? Right? Because we offered buy side, we offered sell side, we offered buy side, we offered sell side, and then we left. Right? So now this right here is a potential balance price range. Balance price range. And that's how y'all do it, BPR. And that's how y'all do it, BPR. Right? So we offered buy side, sell. We offered buy side, sell side, buy side, sell side, and then we left. Right? When we left, we got a breaking market structure, a raid on sell side, proven by the rejection. Right? The rejection brings the draw back up here. This is a balanced price range. We don't expect price to go back up there. We have an imbalance. The only thing up here that serves as a place to get liquidity is this 5-minute imbalance right here, right? We got a breaker. We give it to the top of the breaker, right? We can give it to the top of the breaker. The wick can even go past the breaker a little bit if there's something on a lower time frame that it needs to reprice and rebalance, right? But the wicks do the damage, the bodies tell the story, right? Get short in that fair value gap, and then off to the races, right? So now let me show you the 1 minute chart, and then that would be it. Let's go to 1 minute. All right. Now, okay, I just want to show you one thing on the 1 minute chart. Well, actually two things. I'm gonna show you on the 1 minute chart. Actually, two things. So remember when I told you about the breaker combined with a mitigation block, right? So here, since we got them long wicks, I ain't gonna include the wicks, right? We got a breaker there, right? Because we came down with the low. We had a long wick low there. We got another low there. So we came down to this low, came up and took out those highs over there, right? And then this price leg came down here, but this low did not take out that high. So right there, we have a mitigation block right there, right? And then right here, there's a 1 minute. There's a 1 minute fair value gap right there. Right? Remember, this is the 5 minute fair value gap. This is the 5 minute fair value gap, but there's a 1 minute fair value gap right there. Remember when I told you the price can go above if it's something on the lower time frame that it needs to reprice and rebalance, right? And if you look higher, there's no other imbalances up here that needs to be taken care of. Price came up. You have this mitigation block right here. You got a fair value gap right there. You got a breaker right there. You got an imbalance right there. Whoo, tasty, tasty treat, right? So we come down, take care of these imbalances right here, right? Push back up, stop, wick for wick again. Why? Because it don't need to go back up through this balanced price range, right? This candle left that area. So from this candle over, the algo knows, oh, I don't need to go any further than that. Push down, right? Came down, giving up the ghost. Now, one other thing I want to share with you really quick. It's kind of hard to show it. It's kind of hard to show it if you're not like looking at it. It's like really difficult to show it, but look at this area right over here, right? This area right over here, right? So whenever I see price consolidating like this, right? Now, don't confuse this for when price is consolidating coming up and we're bullish. This is for when price is coming up and consolidating right here at this higher time frame when we're bearish, right? When we're bearish, right? So this, like if you didn't get an entry over here, you can use something like this right here as a secondary type entry. Now, how I use it, right? We came to a higher time frame, just like on the other page, we came to the higher time frame buy side liquidity, right? We came down, we got a break in market structure, right? We got a break in market structure, and now we got a break in market structure. We came down and we broke down here. So now here we go again. We just came down, we got a break in market structure there, right? Got the break in market structure. Price is going down to get what? Some money, right? This low right here, right, got rated there, right? We came down, we rated this low here, right? We rated this low here, right? So now we need to go and get some liquidity that's built up, because it ain't many people that's building up their liquidity below this rate. Some people may be, but you're starting to run out of options, right? So look what price did. It came all the way down here and got below this low, right? So it came down and soaked up some more liquidity, right? Took off and came back up. And when it got back to the break, that higher time frame, it started to consolidate right here, right? It's just it's consolidating right next to this area that's consolidating. But if you notice, blow this up a little bit. If you notice, there's an imbalance right here. Right. There's still I know my lines are horrible, but there's an imbalance right there, right? There's an imbalance there. But when price came up, it just started wiggly, 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 right? So now that it's consolidating there, right? It's engineering liquidity, right? It's engineering liquidity because anybody, okay. If you got long there, once we came back up to this right here, what does retail see this as, right? Right. It was support that turned resistance, and then we got above it, and now it's support, right? It's support again, and we're just consolidating right there, right? So now, what are they doing? They're going to run, put their stops right there, right? So anytime you see it spooling like this right here, well, I mean consolidating like that right there, after you're bearish and we just came down, ran some liquidity, and we coming back up to the breaking market structure, and we don't go immediately to the imbalance, we just kind of pause and start consolidating like that, we're engineering liquidity, right? So once it pops up into that imbalance, I say 8 times out of 10, it's going to be a violent, extremely fast drop down. And you notice now, these are 1-minute candles, right? Once we got into this imbalance right here, and this candle opened up, this wick dropped down so fast because it attacked these sell stops up under here with aggression. But this time it's not attacking it to go up, it's attacking it to punish the people that was getting long, and now it's just going to use that liquidity to continue to drop down, right? So we come up here, hit that little imbalance, and then attack them with, people be like, oh my goodness, what just happened? Because it engineered the liquidity, went up there, hit the imbalance like it was supposed to, and then attack, like how when they drop them little crickets in there with the frog, and you just hit them real quick, attack them, and then boom, drop down. So anytime you looking to get short or long, and you go and get liquidity, you go and run liquidity, and you coming back to the imbalance or your entry points you want to get to, and it pauses and start engineering liquidity, right? Once it hits that imbalance, right, it's going to be 9 to 8 times out of 10, it's going to be like a violent attack on those stops on the opposite side of that little consolidation there. That's all I got, man. That's all I got. I know I kept y'all here for a long time, so if y'all got any questions, feel free to drop it in the chat. But that's it, man. That's all I got. I hope I was able to share something that helped somebody. I'm looking at the comments, see if anybody put anything in there. Yeah, I'm glad I joined. I learned a couple new things. Appreciate that. Appreciate something special about the 2 p.m., 1 hour, 4 hour open. Took that same trade. That's what's up, Father Legend. Because it was repriced. Connection lost. That's why passed through. I'm saying this mouse class, bruh. If you don't let me market the $9.99 per month exclusive Enigma. Hey man, I appreciate y'all, man. I appreciate y'all. I appreciate y'all, man. Appreciate you. Me ain't. Hey, me. I told you that the other day. I said, Franklin Crumbs. What's up, Franklin? Appreciate you for dropping in. I don't know that name. Can you show me a breaker? I don't get it. So one candle can make up the high and the low of a breaker. Uh, on the 5 minute is not as clear. Like on the 1 minute, it's a lot clearer. Like, because I looked at it on the 1 minute, but since I was showing on the 5 minute, I just showed it on the 5 minutes. So on the 1 minute, it's a lot clearer. Cause like sometimes, just say if you like when you got daily candles, sometimes your daily breaker, like everything will be done inside one candle, because it's like sometimes the higher time frames, the stuff that be happening on the lower time frame is playing out on the higher time frame. Um, and it's clearer on the lower time frame, right? Because see here, see how clear it is right here on the 1 minute, but that's that same 5 minute candle that I remember I highlighted it with the 5 minute candle. But when you look right here, right, it's like it's clear. Like now for Franklin, a breaker, what a breaker is, right? A breaker is when you have what's still showing? What is Oh, there it is right now. Okay, so a breaker, right? It don't matter what time frame it is, right? This is what what creates a breaker, right? So a bearish breaker, right? In this case, we're talking about a bearish breaker, right? A bearish breaker is right when you now the place I like to look for breakers is when we've taken liquidity. If we haven't taken liquidity, I'm not looking for breakers. Some people may just try to look for breakers just in the middle of everywhere. But if we haven't taken liquidity, I'm not looking for breakers, right? So, um, for example, right, we've taken liquidity there, right? We know that's a higher time frame liquidity. We already established that. So we took out that higher time liquidity right there, right? So once we took out that liquidity, we came up and we made a high, right? We made a high. I should have left this on the drawing board, right? We made a high, right? And then we came down and we made a low, right? So this low, right? This low came up and it broke through this high, right? This low broke through this high. So when we trade back down through this low, when we get a break in market structure past this low, the last down close candle or the last consecutive down close candles is your breaker. That's your breaker right there. So you take out liquidity, you form a high, right? It don't have to be right after it. It just got to be liquidity has to be taken, right? So you take out liquidity, you form a high, then you come down and you make a low. When that low breaks through that high, so you have a high, a low, a higher high, and a lower low. High, low, higher high. That's the signature of a forthcoming breaker, if that's the word I'm looking for. High, low, higher high. Once you see that high, low, higher high, right after you've taken liquidity, start looking for a break in market structure at the low that took out the high, right? Now, shout out Lex. Shout out Lex, right? For melting butter setup, right? Right. When you take out liquidity, right, you form a high, right? Form another high, right? Form another high, right? And then you come down. When you come down and you break that low, right? When you come down and you break the low, then you're going like, but we didn't do it in this case, but like you go high, 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 and then come down and break the low, right? That'd be your breaker over there. Now, so you take liquidity, 1, 2, 3 highs, then come down and break the low, then you enter on that breaker over there. But now, so you got a high, low, higher high, and lower low. Now, the difference between a breaker and a mitigation block, right? On a mitigation block, after you take out liquidity, right? After you take liquidity over here, right? You make a high, you make a low, but this low does not break that high, right? This low does not break the high that sent it there. And then you come and have a break in market structure. So now these down close consecutive candles is your mitigation block. That's your mitigation block right there. That's the difference between a breaker and a mitigation block. The breaker, you have a high, the low breaks the high that sent it there, and then you come and have a break in market structure below that low. That's a breaker because it breaks that high. The mitigation block is a failure swing. You got a high, a low, a lower high, and a lower low. So the breaker is a high, a low, a higher high, and a lower low. The mitigation block, bearish mitigation block, bearish breaker, it's a high, a low, a lower high, and a lower low. Is this what Mendez was showing? No, Mendez was showing something a little bit different. With it was like a 4 candle pattern. It was like a 4 candle pattern where I don't know if I could see one. I don't know if I could see one. It was like a 4 candle pattern. Right here. Like this would be one right here. This is what Mendez was showing, right? So see, we came here. we already took out liquidity. We came above the liquidity. We took it out over there, but we come back above the liquidity here, right? And so looking at this candle right here, right? This candle came above that high, right? You came above that high right there, right? You came down this candle here, right? You made a low right there. Then you went back up, made that high right there. Then you came back down and made that low right there. So that would be the breaker in there, right there. And then price came back up into it here and then dropped. Right. So that's how Mendez was showing it right there. But that ain't how I use it. It took me forever to be able to see that, right? Because you got a high, a low, higher high, and a lower low right there. Right. So that's the one Mendez was showing. Thank you. Thank you. 1 minute, yes. You hear me? No raid, no. Hey, shout out. It's this one dude. He liquidity. That's him. That he no raid, no trade. He be saying that. I don't know if that's where you got it from, but he I be looking at some of his YouTube videos. He got some dope stuff. He got some dope stuff. And he be saying no raid, no trade. But he can't say liquidity to save his life. That boy be like liquidity. You validate order blocks if they wick over the high or low, or do you do body closures in order to identify one? Wicks. I count wicks. I don't trade order blocks, but I count wicks. And if you violate the high, it's a potential order block. It's a potential breaker. It's a, you know what I'm saying? Now, what makes it an order block is you have to come to a higher time frame point of support or resistance, have a shift in sentiment, right? And then break the high or low. That's what makes it an order block, right? Any down close candle or up close candle ain't gonna be an order block, right? It's not going, and you need to have a fair value gap or an implied fair value gap to seal the deal, right? So any up close candle, down close candle ain't gonna be the order block. Like so uh let's see here. This is a little, this is a let me see here. You want to get, don't you hate when you looking for something and you can't like really find it? Let's keep that body moving. What? Oh, I'll look at that in a minute. Let me see here. So okay, so let's look right here. Right. Let's look right here. So now here we go. We're coming up, right? We're at a higher time frame of resistance, right? We got a higher time frame of resistance, which is an old high, an old daily fair value gap, right? Where are we? Well, this ain't the same area, but we'll just use this right here, because this right here, this green thing, that's a old higher time frame area of like resistance, right? Because it's probably a BISI that we're below, so it's like resistance right now, right? So we come up to the higher time frame resistance. These are 1 minute candles, so this wasn't marked on the 1 minute, so this green box, it's a higher time frame, right? So we come up to a higher time frame of resistance. Now I'm gonna move this out the way so that I can show you what I'm saying, right? So then we came up to it, right? You can go to it, you can go through it, you cannot even make it to it, right? But you come up to higher time frame resistance or support, right? Then you have a shift in sentiment, right? So now we got a shift in sentiment right here, right? We come up, we got a shift in sentiment right here, because we came up, we came down, right? So we got a shift in sentiment right here. We came up, we came down, right? And then we broke below, right? We broke below this area there. So we broke below this area there with some aggression and created a fair value gap, right? So we came up to the support, had a shift in sentiment with a fair value gap right there, right? So once we broke the low of that up close candle right there, because we went up, shift back, went up, and then broke, right? Up to it, shift in sentiment, pushed up, and then broke, right? We broke this direction in this case, right? So we went up, shifted sentiment, pushed up, and then broke. So we broke in a reversing type way in this case right here, right? So since we broke the low of this up close candle here, these last consecutive up close, that's a doji, but we're gonna count that one too. So now that right there would be the order block, a bearish order block, because we came up, shifted sentiment, pushed up, broke down, broke lower, left the fair value gap. So there's your order block right there. So now when price comes back up to your order block, it stopped price from going higher. It's a bearish order block. Bearish order blocks are going to be green if you leave them colored green. It's going to be up close candles. Bearish order blocks are going to be up close candles, right? And then we sold off of it. So the fact that it's an up close candle doesn't, the fact that it's the last up close candle doesn't make it the order block. What makes it the order block is that we've come to a higher time frame of resistance, had a shift in sentiment, right? Had a breaking structure with distribution combined with a fair value gap. And I say you want a fair value gap or implied fair value gap. What an implied fair value gap would be is if we had heavy distribution down, but this candle at 151 and this candle at 153 had long wicks on either side, then it would be an implied fair value gap right there. So then, because you just need the heavy distribution leaving the area where you had the shift in sentiment, even if so the bullish order block right here would be like if we came to an area of support and had a shift in sentiment here, if we were to take off and break the high of this down close candle, then that would be your bullish order block because we broke up instead of breaking down. That would be your bullish order block. We came up to resistance, had a shift in sentiment, and then we took off and broke up. So that would be your bullish order block right there. And the only difference is if it's a if it's a if it's a bearish order block, right? If it's a bullish order block and we're coming down, then it would be like a break to the reverse. Just like how this bearish order block we broke to the reverse, right? The bullish order block we would break to the reverse, like we would come down, right? Have the shift in sentiment, push down, and then break to the upside, right? Hopefully I ain't confused nobody with that. You're welcome. You're welcome. Glad I could help somebody. We've been on here for almost 3 hours. I'm gonna get me a sip of water. Water. Let me get like 30 seconds of a beat while I sip some water. Water. Hey man. That makes sense. I like how you traded only in POIs and conjunction with fair value gaps. What's POI? That would increase the win rate because their high probability is POI. Point of interest is POI point of interest. I don't know. Anyway, y'all know how I like to end my lives. I'm supposed to be on vacation right now. Thank you. Point of interest. I'm supposed to be on vacation right now from doing lives, but you know what I'm saying? This right here was just sizzling in my spirit, and I want to share this with everybody. Hopefully it was clear. Hopefully I helped somebody. If I didn't, I'll try again next time. But y'all know how I like to end it. Don't put off till tomorrow what you can say today. If your loved ones are still here with us, take the opportunity now to let them know that you love them. Don't just say it. Don't just show it. Say it, show it, and confirm it. Because one of the worst things in the world to do is to be trying to show somebody that you love them, and they're not receiving it because you're not speaking their love language. Open up the lines of communication so you will know how to express love to them and they'll know how to express love to you. If you're blessed enough to have your parents still with, especially if you got both your parents, and especially if you got your grandparents, let them know, man. Let them know now that you love them. Go by, see your mama, wash your car for her, take out a trash for her. Hey, buy a recliner, do anything, man. Let them know that you love them. If you got grown kids like myself, call them. They may not answer, text them. They'll text you back in a couple of days, or when they send you a cash app saying that they need something. Go in the other room now. Hug your spouse, kiss your spouse, hug your kids, tell them that you love them. Hug the dog, hug the cat. You can even hug the gerbil and the turtle tonight. I thank y'all. I appreciate y'all for coming through. What's up, Wiki Wacky? What's going on, man? I went in to the settings somewhere. Is it appearance? Let me see. Is it appearance? Nah. Trading. Money. No. Symbols. Time zone. Trading session. No. status lines, scales, scales. It's under scales. So go to chart settings, scales, and if you come down here to time hour formats, just switch it to 12 hours instead of 24 hours. And it'll have the 12-hour clock instead of the 24-hour clock, or military time as we used to call it. So again, chart settings, I just hit the little settings things over there, scales, scroll down to the bottom and change it to 12-hour instead of 24 hours. Yes. So I've been trying to figure out brokers for weeks. Oh, breakers. Okay. All right. That's what's up. Go back and back test it and practice it, Franklin. You're welcome. You're welcome. This will be enough for the rest of the week. This is one to keep rewatching. Taking vacation. We'll be here when we get back. Hey man, I appreciate y'all, man. I'm fun to go hang out with my sweetie. My sweetie just got back in town. I for some reason I was thinking that she wasn't coming back till tomorrow, but that was on me. Anyway, I'll see y'all Monday. I'll see y'all Monday, man. Again, I appreciate y'all, man. Gone.